If you opted out of the NHS pension at any point between April 2015 and April 2022, then you absolutely have to watch this video or listen to this podcast, because you may have an amazing time-limited opportunity to undo that opting out decision. And potentially this could see that you buying back some of your NHS pension for hundreds of pounds, and that could translate to pension benefits at retirement worth thousands of pounds. Conversely, you could opt to buy back some pension for hundreds of pounds and it could make no difference, or paradoxically make your pension worse. So this is incredibly complicated, but it's really, really important that we understand this. This is a time-limited opportunity which has arisen very, very recently. And it's really important that as many NHS pension holders as possible know about this. So you're here watching or listening, great, but please share this with anyone in your department or your friends or anyone else that you know this might affect, because this is really, really important. This could be an amazing opportunity, but if you do nothing, you're going to miss it. It's really complicated. You need expert help. If you want expert help, we've put a link to contact the experts in the show notes below. Click the link, fill in the form. And the other thing to say is that this was recorded as part of our free live webinars. And if you're not getting the invites to those, then that tells me that you're not on our email list. Over 70,000 doctors on our email list now, and we do live webinars quite often. So if you want to get invited to these live webinars and come along live and ask questions to the experts live, it's medicsmoney.co.uk/join to join the email list, and you'll get the invites and you can come along and join us, which would be amazing to see you. Over 3,400 of you came to one of our live events in October, which is incredible, blown away by the support. We were going to take November off, but then we found out about this opportunity and we had to let as many of you know about it as possible. So medicsmoney.co.uk/join if you want to get invited to the next live series of events. Enjoy this video. I think it's very complicated, but I think you're going to enjoy it. Thanks for watching. Good evening, everybody. We are a couple of minutes early. We'll be starting on time, but if you can see some slides and hear some words, can you hit the thumbs up button just to let me know that everything is working correctly? Okay, this is a strong start. Excellent. Thank you so much. Amazing to see so many of you here already live, giving up your Tuesday evening. Really great to see so many of you. While we're waiting for everybody to join, or the other people to join, if you head to the chat and just let me know where you're watching from tonight, with bonus points for the exoticness of your location. Graham's chuckling because he's not in an exotic location at all. Although it's kind of a nice part of the world where you live.
It is. Cheltenham's lovely.
Okay, got some Hampshire. Wait, Beezer. Is Beezer Ibiza? We need clarification on that, because that's pretty exotic. Not that Edinburgh or Troon or the Isle of Lewis or Welwyn are not there. Torbados, yes. The Costa del Torbay, I love that place. Had many a happy night out there in Route 66, I think it is, at the top of the high street. Anyway, let's move on from Torbay. So, okay, we've got yeah, Wiltshire's exotic, I'll give you that. Brilliant, okay. Someone's in Stedding. It's up the road from me. Brilliant. Okay, it is 7:30. We are going to get started, if that's okay. And if you were around in October, we did 4 large webinars in October. Over 3,500 of you came along to those. Amazing. Thanks for the support. Like, really, Medics Money would not work without your support. We did plan to take November off and have a little rest, but then Graham phoned me up and said, I got some important news. Like, this is big for anyone that's opted out of the NHS pension between 2015 and 2022. You need to know about this. And then I thought, well, let's just do another webinar. Amazing to see so many of you come here tonight as well. Really appreciate the support. But this is big news if you did opt out in that time frame. And as you know from Medics Money, you know, if you are going to be getting financial advice for doctors, you need an absolute expert. A normal financial advisor, regrettably, will not do. And so I'm really pleased to introduce to some of you, all of you, an absolute expert in the business. I think me and Graham first met in a pub in Hampshire about 8 years ago when he showed me this spreadsheet which could help you to calculate your annual allowance tax situation. And it was really complicated. And it's probably the first time that pub has ever had a complex tax calculation spreadsheet demonstration done in it. But over to you, Graham.
Great, thank you very much, Tommy. So yeah, going to be talking about the NHS pension buyback and the opportunities, which are really, really good opportunities for some, but unfortunately there are some huge pitfalls associated with this process as well. So I just want to make you aware of them, and we'll go through that this evening. So for those who don't know about ManyFinTech, we are very much NHS pension specialists. We're not financial advisors, we're not accountants. We just specialise on the NHS pension. We have an excellent reputation and unrivaled technical knowledge when it comes to the NHS pensions. All of my staff have formerly worked at NHS BSA in very technical roles. Myself personally, I was a chartered financial advisor for 15, 20 years or so, working solely with medics as well. And we're on the NHS employees list of recognised experts, and we have saved millions of pounds for members by identifying and correcting annual allowance tax charges and pension errors on members' records. We've also very much stand up for pension members. We highlight the problems at NHS BSA and where they're going wrong, and how some things can be fixed. We liaise with Department of Health, HMRC, HM Treasury, and always putting forward suggestions on how things can be better for medics, particularly around pension taxation and NHS pensions. We broadly have sort of three areas of support. We have our pension reports that we've been our sort of bread and butter, and like started back when we met in that pub, Tommy, and I'll show you what it is that we did there. Since then, we now do the sort of the McLeod remedy support. So when you get your brown envelope with all of those historic annual allowance figure changes, we can deal with that, and that's all covered by the cost claim back scheme. But the one I'm talking about tonight is the contingent decision buyback support service that we offer, which costs more than our other services because it involves a lot more work. However, this can be covered by the cost claim back scheme as well, and I'll cover that later on. If you did want to register for that service, you can just simply go to www.bit.ly/mm buyback, or medics money buyback, or just simply scan the QR code that you see in the top of your screen. Okay, so this all started with the McLeod remedy. So back in 2011, the Hunt report proposed reforms to public sector pensions, and they said that special protections for members over a certain age should not be necessary. However, when these reform schemes were introduced in 2015, they had this transitional protection that allowed older members to stay in their older final salary schemes. Not surprisingly, younger members were aggrieved, and so the judges took this to an employment tribunal under the name of McLeod, firefighters the same under the name of sergeant, and it escalated through the courts until July 19, when government accepted that age discrimination needed to be remedied. So this impacts people who were in service on or before the 31st of March 2012. So that's people who are still in the NHS, still contributing to their NHS pension, those active members. It can include deferred members, so people who might have now left the NHS, or they might be in the NHS but no longer members of the pension scheme. It also includes pensioner members. Now, you might be familiar with the two big impacts of the McLeod remedy. One are those remedial pension saving statements that have been hugely delayed, and therefore reassessing your annual allowance tax charges between 2015-16 and 2022-23. And you will also get these remedial service statements. This is your McLeod choice bit, the bit that enables you to decide, do I want my benefits in the old scheme or the new scheme for those 7 years? So those are the two big impacts of McLeod that most people are aware of. But there were other things that happened when the 2015 scheme was introduced. We saw a significant amount of confusion. Many believed that their old pension had ended, or they thought that they could only now get their NHS pension when they reached state pension age. But the tax was a huge problem. Having two pension schemes grow at the same time simply amplified that pension growth, just at the same time that annual allowances started to shrink, which then started triggering tax charges. Now, if you look at the impact of the tax and what happened, everything was relatively low until we saw the introduction of annual allowance taper in 2016-17, and the number of people subject to annual allowance increased, and then it got worse and worse and worse, and specifically hit healthcare. Many consultants, many GPs subject to annual allowance tax charges. Don't be fooled by the drop-off. The drop-off here is because of McLeod remedy, and so many people in the public sector haven't assessed 22-23 or 23-24. Those numbers are likely to be higher. But we had more pension growth, we had less allowance and bigger tax bills. And what that led to was people leaving the pension scheme. And over that whole of that remedy period, we've had nearly 230,000 people who opted out of the pension scheme. So this doesn't include people who have left the NHS altogether. So there's people still in the NHS, but they left the pension scheme. And it also doesn't include rejoiners. So there are a lot of members who opted out during the remedy period. Now, opting out was a costly mistake, but many people didn't realise it. They were just blinded by this confusion and the tax charges. Take, for example, this member. They knew that their pensionable pay was increasing from around 100,000 to 130,000, and they opted out because of the fear of the annual allowance tax. So what have they missed? Well, they missed the pension in the 2015 scheme. That was nearly 2,500. They missed that final salary link to all of those years that they built up in their final salary scheme. So that's £9,000 a year of pension. And they missed a lump sum that came from that 95 section. That's 27,000. So overall, by not being in the scheme, they had nearly £11,500 less pension, £27,000 less lump sum, and they only saved just over £8,500 of net income once you start taking into account tax, loss of personal allowance and everything else. So they didn't really save much by being out. But what about that tax bill, the bit that was really worrying people? Because yes, had their pension gone up by that nearly 11,500 and the lump sum by 27, it would have been pension growth of nearly £210,000. It would have been a huge tax charge of nearly 90,000. But don't get worried about the tax, because you can, for example, use scheme pays, whereby that debt is converted into a deduction from your pension at retirement. Now, for this member, even after you take into account that scheme pays impact, it reduced the pension by 3,500, the lump sum by 8,740. So overall, the benefits still significantly outweigh the tax cost, and the extra lump sum alone is more than the net cost of the pension contributions. So this should have been in the pension scheme, and they'd be kicking themselves if they found out about this afterwards. But what if you could change your mind? What if you could go back in time and say, you know what, I don't want to be opted out anymore? Well, the good news is you can now reinstate some or all of your opted out service that you had between the 1st of April 2015 and the 1st of April 2022, as long as you opted out due to the McLeod discrimination. So you needed to be one of those people that was put across to the 2015 scheme, but you would have made a different choice had you been able to stay in your legacy 9508 scheme. Now, big warning. Buying back service may be more complicated than it first appears. There are many complex rules with the NHS pension, and they interact with reinstating service. Let's take, for example, this case that we've been dealing with. A consultant, top increment, they had a bronze clinical excellence award and management responsibilities until 2016. They then opted out in March 2016, having accrued 25 years in the 95 scheme. Now, if they do nothing, their pension would be just a little over £60,500. If, however, they were to reinstate every single month of service, it would cost them £124,000, but they would now increase their pension to £64,078. Now, we're well aware of how complex the scheme is. We've modelled different scenarios for this member. We found a pattern of reinstating their service where they could spend just £40,000 to get a pension of £65,465. So an extra £1,387,000 in pension, but it's going to cost them £84,000 less. There's another service pattern that we've looked at whereby they could spend 104,000 and their pension would increase to 71,666. So For them, a £29,000 net cost, once you take into account tax relief and the extra lump sum that they get, increases their annual pension by £11,054. So it absolutely makes sense for this member to actually reinstate their service. But how they do it is very much dependent on your individual circumstances. They would be absolutely daft to simply reinstate all. They would be better off looking at either option 3 or option 4. Now, one thing you can do just to check to see if you are an opted out member, and I'd recommend you do this at least once in your career anyway, is if you ask NHS Pensions for your 05 service extract, you can call them on the 0300 330 1346 number. And this document shows you for every role that you've undertaken in the NHS, what the start date was, the end date, and the pensionable pay. You just have to look for the gaps between 2015 and 2022 to see if you would be eligible to reinstate this membership. Unfortunately, this is only available in England and Wales. It's not available for those in Scotland or Northern Ireland. Now, before I go on to the buyback side of things and buyback service, there are also other contingent decisions, and they've now released the application form for this. So this is for decisions not related to buying back service. So it covers anything pension related that you would have done differently if you had remained in the 9508 scheme. So that could be reinstating an added years contract, an added pension contract. And one of the cases we're looking at now is somebody who is saying, well, I partially retired in 2019. I carried on working full time in the NHS, but I wouldn't have done that had I had access to the 95 scheme. So they would have actually gone for a later retirement. And that's being entertained by NHS pensions at the moment. So there are lots of other contingent decisions that you can apply for. It does not, however, cover sort of any employment related decisions. So if you were to say, well, I wouldn't have gone part-time, unfortunately that would not be covered. Now, for buying back opted out service, all of the information is now available on the NHS BSA website. They have a series of calculators that you can look at, and then they have the application form itself. And this form covers any service from the 1st of April 2015 to the 1st of April 2022. And within that, you just simply have to write in all the details of when you were opted out, who your employer was, what your job title was. You then pass it to your employer, who then adds in any extra information. GP partners need to send this via PCSE. And then once you've submitted it to NHS BSA, they will calculate the cost of buying back that service. It will include interest. And it will provide this personal illustration as to what this service would look like on your NHS pension. As I say, there are some calculators that can help you just give you an indication of what some of these costs could be. But you will get this official quote and illustration back from NHS BSA. So how much we actually need to pay? Well, it will depend on who you are and how you work. So first of all, employee contributions will be due. So if you're employed, so Hostocks, for example, well, your pension contribution is based at the rate at the time that you had the opted out service, but importantly, it has been discounted based on your effective marginal rate at the time. So they will ask you, what was your pensionable pay and what was your total pay, so that they can try and reflect the tax relief that you would have had at that moment in time. Admittedly, having had talks with HMRC and NHS BSA and Department of Health on this, they have differing views of whether this is the right approach to be using. So we might see this change. We don't know yet. If you are self-employed, however, you still use the pension contribution rate at the time, but there is no discount applied to the contribution rate. Instead, there is this expectation that members would then recover tax relief in the normal way. Now, that's going to be a bit difficult for some people, because in the normal way means pension contributions are normally relievable in the year that they are made. And you normally need relevant earnings, you need to be under 75. So there's going to be people that might not be able to claim the full tax relief that they would have had they made these contributions at the right time. Similarly, for employed members, even though they're giving this discount rate mechanism to give you an effective tax relief, if at the time that pension contribution could have recovered your personal allowance, reduced the loss of childcare, all of those types of things, well, you've lost out financially. Now, I've had quite a bit of back and forth between Treasury, HMRC and Department of Health on this, and they've kind of rested on that if members are unable to claim the right levels of relief, then they can use the cost claim back scheme to recover any financial loss. Now, you might be familiar with the cost claim back scheme when dealing with your RPSS. It was set up so that fundamentally you should not suffer any financial detriment as a result of the McLeod remedy. And so this has kind of been put into that area as well. So this, I think, is going to be one of the most complex things to work out, well, what is the financial detriment of paying now compared to when you could have paid back in the remedy period. Now, what about employer contributions? So employer contributions are not going to be due for this exercise. And this importantly includes GPs. GPs will not have to pay the employer contributions. Now, all of the employer contributions instead will be factored into a future NHS pension scheme valuation, and that will influence the overall employer contribution rate. However, any pension recycling that might have been put into force by trusts, that could be reclaimed. You'll notice on the buyback application form, it asks, did you benefit from a pension recycling scheme? Pension recycling schemes were where you received extra income in lieu of the employer's contribution, effectively because you're not going to be in the pension scheme. So NHS BSA will liaise with those employers for those employers to then recover any benefits from pension recycling for people that reinstate the service. So what about GPs? Now, we've had a lot of back and forth with various agencies on this, and apologies for the wordiness of this, but I didn't want to use my own words. I wanted to use the words that we had from the scheme. So while some GPs did benefit from employer contributions as additional income when opted out, the government has not proposed recovery due to the complexity and administrative burden involved, and there is currently no formal mechanism for NHS BSA to recover employer contributions that were received as income. So on the sounds of it, it does look like that if as a GP you benefited, you won't, but there's no mechanism in order to get that back to NHS BSA. We may see this evolve, we may see this change going forward, but this is the current stance that we have from NHS BSA. Now, as far as payment methods go, again, this depends on a few things. You can, for example, you can pay by a single one-off payment, but again, bear in mind implications on tax relief and everything else like that. If you want to, you can pay via installments, and it's an installment plan where you've got interest. The calculator on the NHS BSA website allows you to go for 60 months. We challenged them on this to say, well, there are going to be some people who might have 7 years worth of contributions to reinstate. What if someone's in hardship? Would you be able to extend this? And they've said that if you did want to, then you can ask for a longer installment period and they would consider it. They can't guarantee anything. And then finally, and this is a really interesting one, pensioner members can opt to deduct the cost of reinstating from the benefits that they receive. Now, we've done a number of examples whereby the extra lump sum alone can be more, than the cost to reinstate membership. So we could see a lot of people go down that route. But remember, you have to be a pensioner member in order to do that option. It's not available to active or deferred members. Now, if you do pass away and you've set up one of these instalment plans, any outstanding payments are deducted from any death benefits that are given. And you can, if you set up an instalment plan, you can choose to pay off the remainder as a lump sum. So let's say, for example, you came into some money or you retired and you had your lump sum and you wanted to pay it off, you can do that as well. Now, there are some important deadlines. The first thing is that once you get this buyback illustration, it must be processed within 12 months of receipt. Now, you can cancel that original application and you can replace it with a new application, and the new application would have 12 months of receipt from a 12-month deadline from receipt as well. Now, where we've seen this in our pilot exercise has been for cases whereby they were going to reinstate, say, 3 years out of 4, and then realize, actually, you know what, I probably should look at 4 years as well. So they cancelled the first one and then looked at 4. Now, there is no explicit entitlement to subsequent additional applications, but they can be considered. So what we mean here is, let's say, for example, you're that member who's got potentially 4 years to reinstate, and you think, well, I could probably afford 2 years now, and then maybe there's a change in life in 2 years' time, and you say, actually, I could now afford to buy those other 2 years. You can apply, but there's no guarantee that they'll say, yes, you can have a quote. I'm hoping this gets challenged a bit more by the unions as we go forward, because I think affordability shouldn't be a barrier, because had you been able to do this at the time, you could have budgeted and there could have been ways of doing this. Now, really importantly, there is no deadline to request a buyback quote. So whilst it's 12 months once you've got a quote, there's no deadline to actually request the quote. This in itself has a whole host of issues, particularly the whole McLeod legislation kind of ends in 2031. But at the moment, Department of Health have confirmed that there is no deadline, but they could withdraw this option at some point in future. So I would urge people probably to look at this sooner rather than later, just in case it does get withdrawn. Now, just to give you an example of what this illustration looks like, this is one. Now, members, you buy back service in chunks of months. So you can see for each year how many months you're actually buying, and it gives you a total of the service that you're buying. And the cost is shown, and again, that cost for employees is discounted based on the marginal rate for each tax year. Self-employed is based on the gross contribution, and then claim back that tax relief via self-assessment. And it shows you all of the interest payments as well on those contributions. We've got an interesting query in with Treasury at the moment saying, well, normally when it comes to tax relief on pension contributions, you can only claim this bit here, but what about the interest? Because interest isn't something normally you would be able to claim tax relief on, but it's not really interest, it's a total pension contribution. So we're waiting for them to come back on that one. Now, the extra benefits that you receive are then shown at the bottom, and it shows you here's the extra pension you're going to get, and here is the lump sum that you're going to get. However, the actual benefits you do receive can differ significantly from this illustration, as it's a very simple calculation that they've used on this. Now, one of the key things is the pension taxation impact. If you reinstate pension membership, then you've retrospectively changed your pension growth during the remedy period. So as a result, a new remedial pension savings statement, or RPSS, is going to be issued to assess those changes. And it'll be treated like RPSs are currently treated. So if you have a new annual allowance tax charge that occurs in one of the outer scope years, so that's 15-16 to 2018-19, well, that tax charge is not payable. It will, of course, impact carry forward for later years that might be in scope, but if it's a new charge for the outer scope years, there is no tax to pay. For 2019-20 to 22-23, those are in scope years, and any new annual allowance tax charges are payable via the existing RPSS process. So again, this is where you compare your previous pension growth versus the new growth in the remedy period using the HMRC online digital service. Again, this is one whereby I would urge you not to do it yourself, but get an agent such as McLeod Tech or your accountant to do this, simply because you can get all of those costs recovered as well under the cost claim back scheme. And then finally, this will also impact 23-24 onwards, because if you reinstate service towards the end of the remedy period, it will reduce the carry forward that is available for some of those earlier years after the remedy period. So that could result in additional tax charges after the RPSS process. Now, again, this has led to some interesting questions to Treasury, because again, remember, there's no deadline to get a quote. So you could potentially get a quote much later on and affect the buyback of old service and give yourself a new tax charge in, say, 23-24, and now give yourself a late payment charge because you should have declared it many, many years ago. Again, we've put this to Treasury to see if there's any way of ensuring members aren't impacted by late payment charges where they put into effect this retrospective membership. Now, also importantly, if you create a new tax charge in 2019-20, whilst you can still use scheme pays and you'd have to pay the charge, the annual allowance compensation scheme is still available to eligible clinicians. For those who might not recall, this was back in 2019-20. We had the daft annual allowance taper whereby £1 worth of earnings could have given you a £13,500 tax bill. And healthcare workers were just simply saying, well, I don't want to risk working this weekend or doing a waiting list because I might just tip over. So NHS England stepped in and said, well, look, tell you what, government are going to try and sort this in the budget. But in the meantime, we'll compensate you for any financial detriment caused by annual allowance tax charges. But lots of people have misunderstood this. Most people have thought, well, they're just going to pay the tax bill. I don't need to do anything. But there was an important process. You had to complete the scheme pays election form and complete a 2019-20 AA compensation application form. And there were two types, one for England and one for Wales. I did a Freedom of Information request on this, and there are 19,851 eligible clinicians that have completed the scheme pays election form for that year, but they haven't filled out the second form. So there's nearly 4,000 members who are going to miss out on nearly £31 million worth of compensation just because they haven't completed the right form. Again, we're trying to apply pressure to change the process so that they don't need the second form. And again, we're hoping that unions would actually back this one as well to see if we can get this process, this daft process, sorted out. But if you do have a new charge, you can use that. If you needed to check, again, you know that service extract we spoke about earlier, if you get that from NHS BSA, scroll down to the bottom, you'll see this, did you use the compensation scheme, Y or N? And if you had a tax charge, hopefully you've got that set to a Y. Now, one of our biggest issues is that members may reject the reinstatement of service without knowing the true value, because those illustrations, they don't reflect the actual impact on members' pension benefits. I'll give you an example. We had one of our pilot cases, when you looked at the illustration, it looked like this 60-year-old member was going to take 16 years before all of that extra lump sum and ongoing pension benefits covered the total cost of reinstating membership. But what the illustration didn't do is it didn't tie up the previous service with this new increased pensionable pay for that year that they were going to reinstate. And with our analysis, we linked that previous officer membership, and the extra lump sum alone was nearly £28,000 more than the cost to reinstating membership. So there was a risk that this member could have just simply walked away from the illustration thinking, well, that's not really worth it, when effectively they just walked away from free pension. There's also cases where the pension taxation can impact the value of reinstatement. And again, the illustrations don't include the impact of pension taxation. We had another case whereby the illustration says, well, you're going to get an extra £4,800 per year in pension and an additional lump sum of £14,100. So it was a relatively short break-even point. It was like, oh, I quite fancy doing this because I'm going to get all my money back and I'll be better off quite quickly. However, with our analysis, we identified that this triggered the annual allowance taper, and the resultant scheme pays deduction from paying all of the large tax charge via scheme pays meant their pension was actually going to go down by £5,800 a year. So overall, they would be paying to reduce their pension, which is absolutely bonkers. We've highlighted this to Department of Health and NHS BSA and said, look, we kind of need some sort of get out of jail free card, some cooling off period, so that if a member inadvertently decreases their pension by doing this, they can undo this. However, they have said, no, these choices are irrevocable. You cannot change them. And it's not just tax. There are other areas as well. For example, you can accidentally lose something called a Reg 9 pay protection, whereby if you'd opted out for more than a year but less than 5 years, you could have this CPI protection on your pay. But if you close that gap, you could have a huge problem because you've suddenly lost a lot of pension value. There's a whole host of potential issues for those who are GP members. And that's where we come in, and that's what we've been doing. We look at your pension record, we try and identify if there's any errors, and if there are, we'll show you how to fix them. We'll then work out, we'll do basically one of our pension reports based on how your pension currently is. We then do another pension report based on this is what your pension would be if you reinstated all of that service. And then we have this comparative analysis where we sort of look at, well, this is what NHS has said you're going to get, and this is what we think you're going to get based on the linking of all of your pension membership based on the pension taxation, and we look at this sort of break-even analysis and do this sort of comparison overview, so we can help you understand the consequences of buyback. And as I say, because this includes the impact of annual allowance, late early retirement factors, it can also help with your retirement planning. So you can tell us, you know what, I'm thinking about buying back these years, but I'm also thinking about retiring when I'm 58. What would that all look like? And you'll end up with a couple of reports, the comparative analysis, as well as a call with one of our experts as well, who can answer any questions that you might have. Now, the good news on this is because we sat down with NHS BSA and said, how can you possibly expect senior healthcare workers with complex service patterns, complex tax arrangements, to try and work this out for themselves? And they came back to this. They said that the scheme can compensate for any direct financial loss associated with the discrimination. And we worked out a wording that can go into the cost claimback scheme application of why you'd be using someone like us to actually do this work for you. And in our pilot scheme, all of our pilot scheme cases successfully recovered the 1,500, including back costs. So this could be a way, if you have opted out, it could be a very good way for you to try and look at, well, what does my NHS pension look like? What would it look like if I reinstated the membership? And remember, these are only illustrations that you get from NHS BSA. You don't have to take out the membership. So you can do this as an exercise to work out whether you should or you shouldn't reinstate that membership. And again, as I say, if you did want to register, then there is the QR code at the top there. Now, once you do go on that QR code, it'll take you to a form, and within that, we're going to ask you a series of questions. Apologies, there is a lot of information that we need, so we will ask you quite a few questions. Once those questions have been answered, we will then set up a secure SharePoint folder for you. For anyone that's familiar with our pension reports, it's pretty much the same process that you have for that. So we'll send you a list of instructions of what documents that we need and where you can get them. Now, we're saying cases could take between sort of 8 to 12 weeks due to demand. We're already seeing that might start to creep upwards because there's a lot of interest in reinstating membership. But remember, don't worry, don't panic. Those deadlines, you've got 12 months from when you get receipt of your buyback illustration, and you can always cancel it and get a new one. And there's no deadline to actually request the quote in the first instance either. So there is time to solve this. And in fairness, I think NHS BSA would probably like it if this was a little bit slow, because they've already got so much to do with RPSSs, RSSs, and to be sort of faced with another barrage of substitute awards could break them. So thanks very much for listening. As I say, if you did want our support, then please do scan that QR code or visit bit.ly/MM buyback. But I can see there's quite a few comments there. So let's see on questions.
Yeah, Graham, do you want to take yourself through the questions or not? I'm also going to try and keep the questions reasonably anonymous because at some point this may go on the podcast, just because it's very, very clear that everybody needs to know about this. And there's 180 people in here tonight. That's cool, but got a lot more listening to the pod. So we'll keep it anonymous as possible. And
Okay.
should I just go through them from the top and then we can take them, as many as possible?
Go for it. Let's try it.
Cool. Okay. So I started working in the NHS in 2016 and had opted out. I rejoined mid-COVID. Will I still be eligible to rejoin the pension for the periods I opted out?
So the trouble is you're not subject to the McLeod discrimination. So for McLeod discrimination, you had to have been in the scheme on or before the 31st of March 2012 and had membership within the remedy period. The only caveat to that would be if you've started working in the NHS in 2016, but you had been working elsewhere that makes you qualify for McLeod remedy. So you could have been in the NHS in different nations, you could have been in other parts of the public sector, and then have moved into the NHS, then possibly. But on the face of just saying I started in 2016, then it's unlikely that this would be eligible for you.
Yeah, there's been a few questions on that kind of theme. We'll maybe get to more of them later. I think someone kindly answered this in the chat, but basically, what should we do in Scotland about getting a service extract? And someone has said that the Scottish Pensions Authority will send you a service record, but it's not in such a nice format.
It's not, but one of the things I really do like about the Scottish system is if you go online to the portal they've got, you can actually get like an Excel breakdown of every single payslip. And that's really, really useful for trying to work out, well, what was my pensionable pay for those periods and time. So not as good as the 05 service extract, but it is, yeah, very, very useful.
Okay, cool. Thanks for the person who answered that in the chat as well. That's what Medics Money is all about. Doctors helping doctors, overseen by experts. I cancelled my added years contract during that time. Will it continue after 2022?
So this is a really interesting one because the rules with added years contracts is that if you have a period opted out of more than 12 months, then they are cancelled. So we are now so far down the line that even if you reinstated all of your service up until 2022 and reinstated your added years contract, you've now got a gap potentially of 12 months afterwards. We're waiting to see a case go through. We believe technically it should be fine and it should be continuable, so that it carries on afterwards. But until we see it, we can't really sort of say categorically what will or won't happen. But they have said that you should be able to reinstate it. But it's that separate form, remember, it's not the first one. Oh, the other thing on those, the first tranche of cases we saw who did apply for it, they had the feedback saying, well, you opted out and on the form you said it's because financial difficulty, not McLeod, so we won't let you do it. We've pushed back very hard on that. So if you are in that position, then please reach out for support because, yeah, I don't think that's a valid reason for them to say no.
Okay, cool. Is there a buyback form or calculator that's available in Scotland?
I've not seen it yet. Now, funny enough, Scotland are really, really quick to do contingent decisions because they actually had this on their website at least last year, but they haven't really done much about the process. So I think what will now happen is that they will end up sort of probably following sort of NHS England's lead on this one. I've not seen a calculator for Scotland, but I'd say just double check the website.
I opted out of the 1995 scheme in March 2014. Sorry. I was automatically re-enrolled in June 2015, but at that point decided to stay opted out due to McLeod, but then eventually rejoined in May. Presumably that's May 2016, right?
So that is a classic example, really, of someone who could potentially buy back their service. So you're in the 95 scheme, so that means you would have joined before March 2012. You opted out and had membership that you could have had during the remedy period because of McLeod. So in your situation, you should get the quote, you should go through the process, look at what it's going to cost you, look at what you get back. And if there were financial reasons then, and if there are financial reasons now, there may be ways of either setting this up on a payment plan, or again, this might be a slightly more risky strategy, but let's say, for example, you're say 57 at the moment, and you're looking to retire at 60, you could potentially wait until you're 59 and a half, then get your quote, then retire, and then put into effect your buyback service and use the extra benefits to pay for the cost of reinstating membership, rather than trying to sort of put yourself through a struggle right now. But again, the risk on that, of course, is Department of Health could withdraw the scheme at some point.
So fill in Graham's form ASAP is what I'm taking from that one. I've put the link in the chat if you're wondering where the form's gone. I've pinned it to the very top of the chat. The net cost to me when I brought back in allowed for my marginal tax rate of 40%, but they did not include the loss of annual allowance. I'm therefore in dispute currently, as we should be able to allow for the additional annual personal allowance, lost between 100 and 125k.
Absolutely, and this is something that we talked with HMRC, Treasury and Department of Health at length about. So you can't do anything about the contribution cost. That is what it is. What you can do, however, is submit a claim under the cost claim back scheme for that amount. And by all means, for that person, I'm not going to say your name, please send me a quick email. I'm be more than happy to sort of have a quick look at how you're approaching that, because we really want to challenge that.
If you become one of Graham's test cases, that's in some ways bad news, but also potentially could be good news. Okay.
You might end up being accelerated quite quickly through the process. We find in those cases.
Once you receive the quote, how can you work out where the sweet spot is for buying back service as demonstrated? I think that was asked at the time when you hadn't demonstrated the report that you get and the numbers that you run and stuff. So if you want that question answered, post it again. But I think we kind of covered that, and I understand why you asked it when you did. But then Graham's next slide was useful.
Yeah, and it is interesting, because what we tend to do is we do the 2 all-in or all-out comparison. So do nothing or reinstate everything. But then what we also do is then apply our own knowledge of how these things work, which is how we did that, like that first case scenario, whereby you've got 3 different service patterns of reinstatement and 2 are much better than the others. For example, GPs. The way that your pension works is that your earnings are dynamised by CPI plus 1.5% if you're an active member. If you're not an active member, then they only get increased by CPI each year. However, if you go back in within 5 years, all of that extra 1.5% dynamisation is backdated to the point that you originally left. So we have this really peculiar scenario where if you're a GP that opted out for all of those 7 years and you're still opted out now, you could put in 1 month's worth of contribution in March 2020 and go back in now. If you'd started at the beginning of the year, that is, or maybe you'd need March 2022 and then coming back in now. And what you'd end up doing is having nearly 10 years worth of extra 1.5% applied to your pension. And the biggie, that first one, could also be covered under the annualised compensation scheme if it gives a tax charge. So there are some weird and wonderful service patterns that you can do to reinstate them, but you need an encyclopedic knowledge of the scheme rules of how they all work, which we do.
As you say, that's why you're here. I mean, something that you mentioned as well, just to reiterate this, for GP partners, you said that when you were saying about refunding of the employer's contributions, obviously any partner will know this, but partners effectively pay the employee contribution and the employer's contribution. And you basically said that there's no way to recover that. So if I was a partner, I opted out, I could then opt back in, but you said they have no way to recover those employer's contributions, which effectively would have gone most likely into my bank account, but in lieu of being opted out. That's been tested and verified. Asking for a friend, so, obviously.
Originally, when the form came out, we said, well, this is a bit rubbish for practitioners, because when you look at the form, it is very rubbish for GPs. But one of the key things was there was that tick on there saying, did your employers do pension recycling, that type of thing? And it's like, well, first of all, GPs don't have employers, and they don't have structured recycling schemes. What happens is, depending on the partnership agreement, that partner might benefit from the extra employer's contribution, but in some partnership agreements, it could be distributed. So how the hell are you going to be dealing with that? Are you going to be knocking on the door of some old retired partner and say, by the way, this other doctor was opted out and you got extra amount of money, therefore we want it back? So we challenged them, challenged. And that's why on that slide, I specifically mentioned the wording that NHS BSA have come back to us, which was saying that the government has not proposed recovery due to the complexity and administrative burden involved. So they would like you to pay it back, but no one's going to show you how you could pay it back, or there's no mechanism to do it.
Yeah.
So in a way, it's kind of like half-price pension membership for those GPs.
On behalf of all partners, I'd just like to point out that we pay not only the employers, but the employees' contributions. So get your little violins out. But as you say, on this occasion, could be great news for partners. Yeah, okay, cool.
Which is kind of fair, considering GPs, I think, have been at the sharp end of annual allowance tax because of the way that their scheme has worked within the CPI disconnect problem.
You're showing sympathy to GP partners. You're among friends, as far as I'm concerned. But let's move on from that. I mean, who knows, but I'm going to ask it anyway. If the Chancellor changes the rate of pension tax relief in the next or future budgets, will this have an impact?
No, and it's a really good question. And this goes back to HMRC's answer, was saying that if you can't claim the tax relief that you would have been able to do originally, then that's what the cost claim back scheme is there for. I'm a bit nervous at this stage because we haven't had anybody go through it fully yet. That whole, well, we've had people recover our costs, for example. We've had people recover costs for doing RPSSs. We've had people recover costs even for sort of pension reports to do the pension choice 2 replication exercise. What we haven't yet had is a big cost claim back. And we could with this. Imagine, for example, you're already a retired GP partner and you're looking to spend £200,000 to reinstate membership. Now, you've not got the relevant earnings to gain any tax relief on that in this tax year, but you should have tax relief based on what your marginal rates were at the time. And for some people, that could be 40%, 45%. It could be that 60%, that little twilight zone of loss when you lose your personal allowance. And when we start looking at those cases and trying to recover big amounts from the cost claim back scheme, that's when it's going to get a bit interesting. And I'll feel a lot more comfortable after a handful of those cases have gone through. But we are gearing up those teams to say, look, this is what you're going to expect. We're going to start selling these things. That's why, for example, when it came to the cost claim back scheme to recover our costs, we talked about it with them before we even submitted the first one, because we said we want you to be comfortable with what we're saying and why we're saying it. But yeah, be interesting.
Cool. Okay, tons of questions coming in. We're doing our best. Graham is doing excellent work, especially considering it's quite late at night. I think we already asked this, but answered this indirectly, but just because it's there. I opted out of the 95 scheme on the 1st of the 1st, 2018 till April 2020, a total of 27 months. Now I've drawn down my 1995 scheme. Does this apply to me for claiming?
Absolutely. You can be an active member, a deferred member, a pensioner member. I kind of think this works out better for pensioner members simply because you've got that option to use your pension benefits to pay. And if we go back to that one example whereby they had nearly £28,000 of money above the reinstatement cost, happy days as a pensioner member. You wouldn't actually have to pay any money. You just simply get a whole bundle of cash from your benefits. It does introduce some complexity. I mean, there's a whole host of complexity they hadn't really considered. For example, if when you passed through retired and you already elected that you wanted to take maximum lump sum, you kind of set this commutation in place. What we're hearing back from NHS BSA is that they will emulate that same commutation again on the next bit. Now that's going to have problems for some people because over the years, we've had changes to lifetime allowance tax in that it was abolished and replaced with this lump sum allowance. So let's say, for example, you were a GP and you retired in, say, 2019 with, 2020, whatever, with 50,000 pension, 150,000 lump sum, you would have gone over the lifetime allowance, but you wouldn't have used all of your new maximum lump sum. So if you want this reinstated service to give you tax-free cash, here's the rub. What you then have to do is you have to get NHS BSA to give you an emergency RSS, which gives you your McLeod choice, elect to say that you want the old scheme, then fill out a transitional tax-free amount certificate form, then fill out a pension tax declaration form, just so that you can get your pension benefits without tax. Otherwise, you will have 40% tax on your lump sum. So yeah, it's going to be way more complicated for pension members. This is why you need support.
Yeah, I mean, this is like a collision of everything that's been brewing in the NHS pension, all the complexities, all rolled into one thing. And you're enjoying it. My head is spinning, but I'm glad that we've got experts like you on hand to help us through it. Okay. Keep going with the questions. That's all right. Seems like I don't qualify for this. I opted out of the pension in 2013 and I rejoined in 2017. Now fully 2015 scheme to facilitate getting on the property ladder as a means of investment. Is there a model out there to ascertain any benefit from buying back 2015 to 2017 pension years?
Well, the key bit is going to be where were you in 2012? Because you're quite close, I think, with that career path. So it just depends. If, for example, you were that member on the 31st of March 2012, then you opted out and you rejoined, your rejoin gap has to be less than 5 years, so you keep that membership sort of linked together. there's no modeler to do it, save for getting the illustration and then using someone like our services to work out whether it's done. Because remember, just using our services and getting quotes, you don't have to then reinstate the service. It's not, you could go through this whole exercise and think, you know what, no, I can't be bothered. But you can still go through the exercise of actually working it out.
I think the kicker might be there that the 2013 was their F1 year. Normally that starts in August. So I'm reading that as their very first day in the NHS was in August 2013.
The only caveat to that is that I've seen people who've gone from other parts of the NHS and then managed to link the old service with the new service.
We had someone on one of our courses who did some nurse associate work before med school, and then had a little gap, and that hooked them into this whole party. So that little work experience was just like the best paid work experience in the history of the game, it was cool to tell them that. Okay. Is there anything that can be done about an opt-out August 2022 for 8 months when the pension tax was high, but then reduced later due to a different growth being used?
Really good question. So in the original government consultation response, they outlined the reinstating of membership for the remedy period, but they also said that they could consider anything else as well that might have been a case of as a result of McLeod. So originally we were thinking, and they actually mentioned that you could go back as far as October 2014 and maybe looking afterwards. But no, when they actually built the legislation for reinstatement, they have confined it specifically from April 2015 till April 2022 with no scope for anything outside of that, unless I suppose that gets challenged and then they change it legally.
Okay, bad news. Can you use a cost claimback scheme twice, i.e. once for McLeod and once for this new contingent service?
You can use the cost claimback scheme for as many times you suffer financial detriment. So you could use it for RPSS work, you can use it for RSS work, you can use it for any other issue that caused you financial detriment. We've had loads of cases that are outside of the standard, what people are expecting, and been able to sort of successfully recover their costs. So for example, we've had people who had to have a pension report done to work out, well, what would happen if I revoked my pension choice 2 exercise, and that was covered. So there's no limit to the amount of times that you can use the cost claimback scheme. There are limits with the types of work. There are some which are specified. For example, RPSSs, it's £1,000 per piece of advice. So if you get an RPSS, you could pay one person £1,000 to look at it. You couldn't pay a second person £1,000 to look at the same piece of work. But if you get a new RPSS, which you get from this, by the way, that subsequent work would also be covered under the cost claimback scheme.
More good news. Do you have to wait for the brown envelope before we use your service?
You don't, but I kind of suggest you should, really, because it gives you a much stronger foundation of the fact, because I kind of liked RPSSs. They have really shone a light of what's gone wrong with some people's pension records. So I kind of say go through that RPSS process, and then sort of to and then go through this, because remember at the moment there are no sort of deadlines to do this. Well, one thing I did spot that I'm going to just quickly pick up on, Tommy. So someone's mentioned the cost claimback scheme is only valid if applied within 12 months from the date of RPSS. Great spot, and this is something that we raised last month, and I wrote to this time I did the official letter to Department of Health and put it in the press and everything, so they can't shy away from the question, and saying that there is this potential issue now that lots of people who have had an RPSS have just simply sat on it. If you look at the HMRC Freedom of Information stuff, the amount of RPSSs they've had into process is nowhere near the amount of people that have had AA charges in the NHS alone. So we know that they haven't done, lots of people are sitting on these statements. So we asked if they could officially get rid of this 12-month deadline. Speaking with the cost claimback team, at the moment they're being pragmatic. They've already had a few cases that have gone past that 12-month deadline, and they have still allowed them to go through. Similarly, the 3-month deadline from when you get your RPSS, HMRC are meant to charge you penalties, etc. They're being pragmatic. They're not charging penalties at the moment, as long as people are at least doing something to try and sort of meet their obligations. But yeah, there is that 12 months, but we're hoping that will get scrapped.
Okay, cool. Way more questions than we're going to be able to answer in the remaining 4 minutes here. But should we do a few more and then do a summary? And apologies to anyone question that we're not going to be able to answer because there's been so many.
Sure. More than happy.
Yeah. Okay. I mean, we alluded to this at the start, but Graham, I completed your form and have the folders, but I've not heard back from you. Well, welcome to my world. How do you know where I am in the queue? Graham, tell us.
It's a bit tricky. Because we have been exceptionally cautious at the beginning, because every time we look at a new case, we uncover another bit of legislation that someone hasn't thought about. And what we don't want to do is just simply rush forward, then suddenly realize that there is the sting in the tail that members can't undo. So we've been treading a bit slowly, waiting to get official feedback. And then once we've got that, say, all right, this trans can now sort of progress, and this trans can progress. But we are inundated anyway with what's going on with RPSSs. It hasn't helped that 23-24 pension savings statements aren't issued, 24-25 pension savings aren't issued, issues with partial retirement, issues with McLeod choices. So with all of those delays with other agencies, a lot of people are calling on us for support, and unfortunately we're not being able to respond as quickly as we'd like. We are recruiting and we are looking to increase that. I'd like to try and get some sort of little queue system in place, but at the moment, don't worry, you've got 12 months from when you get the quote anyway, and there are ways of getting new quotes.
Cool. Okay, Graham, that was amazingly complicated. I'm going to be watching it in slow motion on a replay. There are a ton of questions that we just could not get to, and I really apologize for that. Someone's AI has given a summary of this meeting, but can you kind of sum it up for us in a few words? And no pressure, but you're head to head with Otter AI, who's put a summary here.
I think we're at a point in time whereby healthcare members finally actually have a bit of good news. You can retrospectively reinstate membership, and because of the timing, for some people, this could actually work out better than had they done it originally, which is a good thing, because a lot of people have been put in very bad places because of NHS pensions and pension taxation. But don't go into it blindly. There are so many complexities, not just on the cases whereby you can end up paying money to reduce your pension, but there are cases whereby you might look at things and you might walk away because you don't think it gives you enough pension benefit, not realizing that actually it would have done. As I say, also don't do this alone. There's support available to sort of to go through this. But yeah, I say great opportunity, but beware of those pitfalls.
Brilliant. Okay, thanks so much, Graham. Thank you so much for so many of you coming live tonight. It was incredible to see you. I'm really sorry we couldn't answer everyone's questions, but there was an insane number of questions, which presumably reflects the complexity of this. But we'll have more information about this on Medics Money. You've got all the details, but for now, it's 8:30, which is when we said we were going to stop. We could go on all night answering all of these questions, but unfortunately, we can't do that. So thank you so much for coming live tonight. If you're watching the replay, hi. And yeah, cheers for that, Graham.
Great stuff. Good to speak to you again, Tommy.
Yeah, likewise. Hopefully we can reconvene in a pub fairly soon. Cool. All right. Thanks so much, everyone. And again, apologies for anyone's question that we couldn't answer, but there was an amazing number of them in there. So apologies for that. But for now, thanks so much for your ongoing support, and see you on the next live event. Stay tuned to your emails, because that's where we're advertising these live webinars. We don't tend to put them on anywhere else. I know Graham likes Twitter. We hate Twitter, so we don't go there. Catch you later.
Cheers.